you're watching Market Fatafat on ET now with me, Mubina Kabasi. Stock markets today are seeing a bout of recovery after the fall yesterday. In fact, we are at the day's high for the Nifty and the Sensex, with the Nifty attempting to reclaim 11,650. Sensex now gaining 208 points, so great going for the indices. Interestingly, it's once again the Nifty Bank that's managing to contribute a lot to the markets today in trade. It's the Nifty PSU Banking Index that's on top of the charts of that 2% higher, and that in turn is taking the Nifty Bank as well higher in trade. But the show Market Fatafat is all about talking about those individual stocks that are taking and moving the market. And to do that, we have with us today from our research team, Soumya and Vivek. And we are also joined on the technicals by Gaurav Ratnaparki of Sher Khan. So good morning to all of you. And let's kickstart the show with the banking stock, and that's Axis Bank. Yesterday delivered its second quarter numbers, not that bad. But today we have brokerage recommendations coming in. Macquarie, for one, has maintained an outperform stance with a target at 770 rupees. They see that the slippages have gone up on a sequential basis marginally, but I think their key issue is the fact that the watch list has remained flat. There's not been much of movement over there, and hence that is something that will be on their radar. Credit Suisse as well has maintained an outperform stance. They have a higher target price of 850 rupees, as they believe that the operating profit and the operating performance for Axis Bank has continued to improve. So it's a thumbs up from Credit Suisse on that front. The stock price, while it's off the day's high, is still managing to gain smartly 1.5% higher as we speak. And speaking on banking stocks, Gaurav, let's get in a view on the Nifty Bank. Like I said yesterday, it managed to outperform. Today as well, it's outperforming. Do you believe this bout could continue?
Yeah, that's right. Basically, Bank Nifty has seen nice recovery in last few sessions. However, if you look at last couple of weeks, then Bank Nifty has underperformed the Nifty. The Nifty has already reached its September high, which is close to 11,694, whereas Bank Nifty is way below its September high, which is around 30,800. So I think there is scope for Bank Nifty to catch up on the way up. Even the Delhi momentum indicator has given a nice bullish crossover near the equilibrium line. So I think the recommendation over here is to buy with stop loss at 28,900, and on the higher side target will be 30,800.
Okay, that's a buy, target at 38,800 for the Nifty Bank. Another banking stock in focus, but not for great reasons, is RBL. Soumya, we had the second quarter numbers yesterday, and look at the way the stock has plunged today.
Well, yes, indeed, Mubina, and this was on back of the really weak set of numbers the company posted, particularly profit degrowth of over 74% on a YY basis. Even the asset quality deteriorated significantly, with gross NPAs being up by over 95% on a sequential basis. Loan growth was slowest in 12 quarters at around 27%. Not just this, even the provisions saw a sharp rise of over 150%. On a QOQ basis. In fact, this asset quality is expected to be weak and under pressure even in the subsequent coming quarters. Not just this, in fact, what we could gather from the con call is also the fact that companies looking to raise capital, and in fact the management said that they're looking to raise capital at any price that is possible, and this definitely would be a significant bummer for all the other investors who already invested in this stock, and the stock price is definitely taking a beating today on back of these developments and weak Q2 results.
Okay, 11% gone for RBL, a big fall. In fact, it's come very close to now its IPO price. And Vivek, another stock that's really been making all the noise is Infosys, though today a bout of recovery seen here.
Well, absolutely right, Mubina. So, what you have to keep in mind is that a whole host of brokerages have come out with their opinion as to what has happened on Infosys. In fact, most of the brokerages seem to have one common refrain. Number one, the whistleblower letter, and this particular instance is going to act as a stock overhang till the complete clearance is done. Number two, what you need to keep in mind is the fact that they believe that valuation multiples are something that may derate. But most of the brokerages have actually gone through their letter completely, and they believe that a few of the concerns that have been raised in the letter may be a little over forward, and they believe that this could be something that could be common business practices as well. So today Infosys is regaining a little bit after the severe and sharp correction that it saw yesterday. Trading near the day's highest point. It'll be interesting to see what happens to this particular stock in the coming days as well, and what exactly transpires out of the entire inquiries or the multiple inquiries that will be done into this particular issue.
Okay, $650 for an Infosys as we speak. Like I said, bout of recovery. Another result reaction has come in from Asian Paints. It was a mixed bag and not that colourful a quarter for the paint major, though mind you, on the volume growth front, they have yet again delivered a 7th quarter in a row that the management has said that the decorative volumes grew in high double digits. So great going on that front, but unfortunately not exactly trickled down to the top line. Now, Credit Suisse has maintained a neutral stance, target at 1780 rupees. They as well are giving a thumbs up when it comes to the volumes, but they see that the margins are a tad bit below expectations. There has been an expansion, but the street expected more of an expansion. Morgan Stanley, in fact, has also said that they expect the stock to correct on the back of the results, and that's what we are seeing. It's around 0.6% gone for the counter. Okay, moving on away from results to auto. Gaurav, while today most of the auto stocks are managing to gain, Tata Motors, which actually was in the red for the most part of the trading session, has as well recovered very smartly on an intraday basis. But this entire Brexit uncertainty overhang is something that may perhaps put pressure on the stock going forward. But on the technicals and based on the volatility we've seen in the last 4 to 5 odd trading sessions, what are you observing?
Yeah, that's true. Basically, Nifty Auto Index is showing good amount of traction since last few sessions. However, that is not getting reflected in Tata Motors. Tata Motors witnessed a sharp spike on the upside in the last week. However, that was just a one-day affair, and after that, the stock has fallen back to its crucial daily moving averages. Nevertheless, from trading perspective, the strategy will be to look for buying opportunity. Even at current level, the stock is trading close to its supports, and the risk reward at current level is attractive to initiate a fresh long position. Even the daily and weekly momentum indicators are in bullish mode. So I have a buy recommendation over here with stop loss at 126 and target on the upside will be 144 and 150.
Okay, target 144 for a Tata Motors. Let's take a look at the RWI small case and see what that one's up to. Is it participating with the rally that we are seeing in the markets and the recovery we're seeing in the markets? Remember, the RWI small case has seen outperformance if we look at it historically, and today as well is a day like that. Reclaiming the 550 mark, 0.8% higher is the RWI small case. We'll take a very short break on Market Fatafat and continue with the countdown of movers and shakers. Welcome back. You're watching Market Fatafat on ET now. Like I said, market's doing pretty well and we're really accelerating on the gains as we speak because now it's almost a 200-point rally on the Sensex. But let's continue with by identifying those individual movers and shakers, and we have a lot of results that have trickled in since yesterday. Soumya, Coromandel International is one such. Has it continued its quarter after quarter streak of good numbers this time around as well?
Well, yes, particularly even though we witnessed a degrowth of over 3% on the top line front, the profits really jumped by over 38% on a YOY basis to nearly 504 crore rupees. Well, this was largely on back of lower tax provisioning, and also what we gathered from what management interacted was the fact that better monsoon has resulted in better crop sowing and in fact increase in agri input consumption. So this really had reflected well for Coromandel International, which saw a very good jump in their profit line of around 38% on a YOY basis.
All right, that's Coromandel International, a great surge seen over there. And Vivek, for CAT, how was the second quarter numbers again in the auto ancillary space? And we know what's been happening with auto. So has this seen a similar impact?
Well, that's right, Mubina. Not very encouraging set of numbers as far as CAT is concerned. However, going into the result season, the expectations were extremely muted, and in fact, the company has marginally managed to beat the very muted expectations that it was going in with, and this is mainly due to operational efficiencies. Now, what Nomura is saying is that they believe that the revenue decline of 4% on a year-on-year basis was a disappointment, but not entirely along unexpected lines. What they're also saying is that both the original equipment market as well as the replacement market, both of them saw a degrowth of 8% and 3% respectively, and this is something that they consider as a bit of a concern. Segment-wise, both trucks as well as cars declined very sharply in the first half, but they're slightly hopeful that the second half will be much better. So on the back of this reasonably good or operationally efficient results, the stock hasn't declined as much as what the street was anticipating earlier today.
Okay, 0.7% lower, so the cut is a little restricted. Okay, another result reaction is Rallis India. Now, this stock certainly is losing today in trade, though mind you, it has again come up a tad bit from the day's low. Now, the reason being that while on the top line front, they've done okay. There's a double-digit growth over there at 748 crore rupees. It's not trickled down to the bottom line because the profit after tax has come in lower by 5.3% on a year-on-year basis at only 80.6 crores. So I think that's a bit disappointing, and the stock is down 2% as we speak. Gaurav, HCL Tech, that too is a result candidate. We are waiting for the second quarter numbers from this IT major, and ahead of that, look at the rally scene. In fact, the entire IT space is doing pretty well today in trade. Anything that you're observing in this stock?
Yeah, HCL Tech has seen a sharp reversal today, and unlike the IT index itself, the stock is showing fairly bullish setup. For the IT index, I think today's move is just a technical bounce back. However, for HCL Tech, the move is likely to sustain in the higher territory. The stock is comfortably trading above its crucial short-term and medium-term moving averages. So I think till the time yesterday's low of 1051 holds, the stock can continue to head higher. And on the higher side, initial target will be 1147 with potential to test the May high, which is as high as 1187.
Okay, 1093 for HCL Tech. Samya, ICICI Securities, again, second quarter numbers, but the company has also disclosed a lot in terms of the plans, the future plans, and just in the last couple of minutes, there's been a lot of acceleration in the gains. So what exactly is it, and what is the trigger for the stock?
Well, Mubina, the company delivered detailed set of numbers. The profit saw a very slight jump of over 1%, but it was definitely better than what the street was expecting. In fact, on back of this report, we had CLSA coming out with a note wherein they say that the company is leveraging ICICI Bank's network for client acquisition and new initiatives, which is going to bode really well for ICICI Securities, and it is one of the best plays when it comes to this entire industry. They're maintaining their buy stance at the target price of 320 rupees per share, and in fact they've also raised their EPS, their earnings to factor in the better top line growth and a 15% CAGR over FY19 to 20. So this definitely is a positive in the positive direction, and it's certainly reflecting in the prices, stock prices, which the stock is gaining close to about 7%.
Okay, 6% higher for an ICICI Securities. But on that note, we're out of time, so we'll have to call it a day on this edition of Market Fatafat. Vivek, Samya and Gaurav, thank you for joining in. We'll see you back at 1:30 p.m. for another edition of Market Fatafat.